The gloves are off. Boxing world champion Floyd Mayweather stepping into the ring after financially backing the founders of a $32 million ICO, or initial coin offering, cryptocurrency company. Only problem is, the founders of that company, they've been indicted now for defrauding investors in the course of operating their cryptocurrency company, Centra Tech. Floyd must not be happy. He's a smart business guy, but smart people get sucked into this kind of thing. This is the Securities and Exchange Commission now says, you know what, we're going to take matters into our own hands with a lot of, not all, but a lot of the fraud that's out there when it comes to cryptocurrency. Look at this website. All right, so this is the website called Howey Coins. It's a bogus Bitcoin offering site. And if you look at it, there are all kinds of things here. Oh, there's a token sale. And then if you get in early, there's a white paper. It looks all legitimate. And it says, here's the investment ladder. If you buy now, you will receive double 25% discount. That's the platinum level. You see the champagne. Then you go to, oh, look at this beach. Isn't this fabulous? You'll be gold if you buy a single. You get the 25% discount. Then silver, and then here we have, you know, scenes of, I don't know what this is, Porto Ercole in Italy. Who knows? And then meet the team, and the team looks very hip and young and smart and fabulous. But, yeah, you know, let's go buy it. Let me click on this, and let's say, hey, I'm in. I'm in for the silver. Okay, I'm not going to go crazy. I'm in. It brings you to investor.gov, and it says, if you responded to an investment offer like this, you could have been scammed. Howey Coins are completely fake. Here to weigh in on crypto regulatory atmosphere that is moving as we speak is Jeff Bandman. Jeff, great to see you. You're an expert in this kind of stuff. The SEC, this is smart. It looks smart to me because people get sucked in and then they learn very quickly, and it's not an expensive lesson.
Yep. Thanks for having me, Liz. Yes, I think it's really terrific that the SEC has done this. One of the important missions for the SEC is investor protection. And the fact is, with these new cyber currencies and initial coin offerings or tokens, it's removed a lot of the friction that stood in the way of fraudsters parting people with their money. So the SEC has formed a special cybercrime unit to focus on that, to protect people. But they also are trying to balance their missions of capital formation and letting investors have more democratic access to these. So you have a bit of a balancing act where on the one hand they're trying to crack down on fraud, but on the other hand they're trying not to squeeze the life out of all this innovation.
Well, exactly. And it is a very fine line to walk because you don't want to crush a brand new, sort of in its infancy stages, opportunity here. I mean, we've had the Ripple people on. XRP is that cryptocurrency, and there's a legitimacy to that. But look at this website that the SEC. I want to show you even more here. It has testimonials. We anticipate over 1% daily returns, double. It goes on and on. Then it says, check out these messages from our celebrity promoters. I've never heard of these people, but they even use a boxing champ, a fake boxing champ, which brings us to Floyd Mayweather, who obviously also got tricked into this scam. I don't know how or whether he lost money, but this could happen to anybody, correct? What are the red flags to look for beyond a website that the SEC has been smart enough to put up?
Right. So what the SEC has done here, they've taken a lot of the fact pattern that they describe in great detail in the complaint in that Centra Tech case, and they've applied those here. So there are outrageous claims. There's, you know, if you get in early, then you get a better deal than people who come in later. They claim to have partnerships with people that they can't tell you about. And the white paper that's associated with this. It's actually a pretty good white paper. It's better than a lot of white papers that I've seen, you know, for real tokens. So the SEC should give themselves a pat on the back for that.
Yeah, the SEC, I think you're absolutely right, is trying to walk this very fine line of protecting people and doing their job. But do you foresee more regulation?
So I think what they are doing is really a balancing act, and I think they are trying to be very fair. To them, a very important dividing line was last July. They applied this Howey test, which is based on a Supreme Court case that the Howey coins are named after.
Oh,
and that was the first time. That was the first time in July 2017 that they applied this test to initial coin offerings and made it clear that cryptocurrency offerings could be a security. So they put the world on notice. One thing that was very interesting about the way they went about it was they applied their rules to the coin. They really looked into the details, social media channels, white papers, all the different claims they made, how the governance worked, but they didn't actually punish anybody. So that, in a way, was kind of a fair way to do it. They put the market on notice. And for those who are constitutional law scholars, it's a little bit like when the principle of judicial review was established in Marbury versus Madison, which was also kind of a landmark event. They established their authority, but they didn't punish anybody.
Good to see you, Jeff. Thank you for your expertise.
Thanks for having me, Liz.
I was wondering about the Howie coins name. Why didn't they pick Sheldon coins? Howie. That I would say, well, that can't be real. Good to see you, Jeff.
Thank you very much for having me.